Hey everybody, welcome back to this episode of Tips for Tuesday. It's been a few weeks since we've talked. Today I'm going to talk to you about coinsurance. I know a lot of people have heard of coinsurance as it relates to health insurance, but property, commercial property, and homeowners insurance also has coinsurance in it. And this can get you in a lot of trouble when you have a loss. A lot of people say, well, I want to insure my commercial property or my home for $200,000 because I don't want to pay for it to be insured for what the insurance company thinks it's worth of 700, 800,000, whatever it may be. And you can do that. The problem is the insurance company doesn't want you to do that because they know that most claims are partial losses. And if they did that, they would actually be adversely selected against. 97% of property claims are partial losses. So the insurance companies would, in fact, lose money if they allowed you to do that. So to avoid this problem, they have a coinsurance penalty where they obligate you to insure your property for the full replacement cost value, whatever that is, of course. That's the hard thing to figure out. There are several ways that we'll talk about how you can figure this out, but I'm going to try to do this in about 2 minutes to explain to you what coinsurance is. You don't need to be an expert at it. You just need to know enough to know how to avoid it getting you in trouble in your homeowners or in your commercial property insurance policies. So let's dive right in. All right, coinsurance. What is it? How does it affect me? All right, in a nutshell, here's what it is, okay? It is simply the amount for which you are obligated to insure your property without incurring a penalty. The insurance company, as I said, is going to, they put this in here to basically force you to insure it for full value. A very common coinsurance clause you'll see is called 80%. It could be 80%, 90%, even 100%. What that means is if you see on your homeowners or your commercial property, you can look on the declaration page and it'll be there, or send it to me and I'll show it to you. But it's going to say, let's say it's 80%. That's very common. If it says 80%, then that means that you are agreeing to insure your property for at least 80% of the value. Typically, if it's a replacement cost policy, you're agreeing to insure it for 80% of the replacement cost value. Okay, here's an example of a coinsurance penalty. If you fail to insure it for the value, 80% or whatever that coinsurance clause is, of the replacement cost value, then if you have a loss, they're going to impose a penalty. How does that work? Here's how it works. Okay, first of all, this is an example. Say you've got a $500,000 home or commercial building, okay, as a cost to replace it. If your policy has an 80% coinsurance clause, meaning you are required to insure the property for at least $400,000 because that's 80% of the 500. Okay, let's say in this example that you only insure it for $300,000. Well, then you are underinsured by 25% because $300,000 is 75% of 400. That's 25% less than what you were supposed to be insured for based on the 80% coinsurance clause, okay? So what that means is they're going to say, all right, you were underinsured by 25%. So if you have a partial loss, meaning because if you have a full loss, it burns to the ground, they're just going to pay you the $300,000 and you'll be done. Okay, and you won't have enough to rebuild it most likely, but maybe you don't care. That's just how that'll work. But if you have a partial loss, let's say as an example here, I said a $150,000 fire, okay? If you put it out, there's $150,000 worth of damage. The insurance company's going to say, okay, you underinsured by 25% of what you should have been insured for. Therefore, we're going to give you 25% less on this $150,000 claim. So they're going to take 75% of that $150,000. Okay, that's $112,500. And then let's say you have a $5,000 deductible, less your deductible. So if you have a $5,000 deductible, you're going to take that off too. You're going to be left with $107,500. The rest is out of your pocket. Okay, so that's how that'll work if you underinsure. And so that's why I always try to emphasize the importance of trying to figure out what your replacement value is and insuring it to full value. What are some solutions? Obviously, insure your properties to full value. Now, we're not going to get into this right now, but if you wanted to insure it for lower values, a lot of people with rental properties who are trying to maximize cash flow might do that. You can go another route called actual cash value. That's where you're not at replacement cost. You're going to take depreciation out. This still is important. You need to figure out what the value is less that depreciation and insure it for full value, or you're still going to be subjected to these coinsurance penalties. So the valuation is always important. Okay, most people want a replacement cost value though, so that's what I tend to talk about. But if you can use construction costs in your area as a benchmark. That's typically what we all do. If you have an appraisal where the appraiser actually gave you some formalized replacement cost valuation, you can use that. You can also ask a contractor. If it's new construction, ask them what they paid to build it. You may already know that. If it's not, then if you know any contractors, ask them for advice. Say, hey, what does it typically cost? You've seen my house. What do you think it would cost? Just get advice like that. The other thing to keep in mind is that a lot of insurance companies are going to come out and inspect your property anyway, and they're going to give you a valuation. Or a lot of times when the agent is quoting it, there will be a replacement cost estimator that will come into play. And at that point, we, the agents, are able to give you that advice on what you should insure it for. However, whenever this is possible, and it's typically not on a homeowner's, but a lot of times on commercial property, especially larger commercial property, you can get the insurance company to completely waive coinsurance. Always, always ask for that. Always want to waive coinsurance if possible. There is no reason not to. You always want to do that. Unless you're trying to insure it for less and you're willing to take the risk of a coinsurance penalty. But otherwise, you really want to get coinsurance waived. Most of my carriers, well, I shouldn't say that. A lot of my carriers will. Travelers always offers it as long as you insure it for the value they want you to. If I'm quoting a commercial property with Travelers, I can typically get the coinsurance waived. So that's it. Those are your solutions that are being offered, and I hope that this is helpful to some of you, and let me know if I can do anything to help you. Happy Tuesday.